I know times like this you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Hello everyone, this is Liquidity Club by Ahmed Shawi. Today is Sunday, the 24th of September 2023. I'll be doing the weekly review and I'll be going over what the market has done lately. So let's get started. Starting with the DXY, here we have the weekly chart. As you can see, last week I was favoring the consequent encroachment of this discount wick to offer some support, and we in fact seen price supports price there, and then we rolled up higher. We were very close. You can see the bodies are still respecting the, once we closed above the weak consequent encroachment, the bodies are respecting the weak consequent encroachment, so it's not closing or opening below it, but there is some mohawks, or there is some damage has been done by the wicks, and we were very close to reach to this buy side liquidity, and this is what I'm aiming for at the moment. I'm still aiming for this buy side liquidity at this value, 105.883. So that's pretty much it for the weekly chart. Going to the daily chart, as you can see, as you all know, last week on Wednesday we had FOMC. It's a red folder that is occurring at 2 p.m. New York time, and there's the meeting at 2:30. Anyway, I'm not going in depth with the event or the red folder itself, but mentioning it, we've seen price walking inside the bullish order block and the fair value gap. This candle right there is Wednesday. You can go to your charts and you can see it by yourself. And price on Wednesday has done the maximum amount of damage by taking this sell side liquidity and reaching to the weekly consequent encroachment of which is the bullish order block mean threshold. It's approximate, and then from there we've been pressing higher. So I'm still favoring a run towards the buy side liquidity, as I've mentioned, which is this buy side liquidity. That's pretty much it for the DXY. Going to the ES, here we're viewing the December's contract because we're currently trading inside of that month's contract. You can see that last week we have a big large down close candle that's going to the downside, reaching to the sell side liquidity and reaching and trading inside the weekly fair value gap and closing below it. Now these are targets that I've set weeks ago, so weeks in advance I was aiming for these lows. When we were here trading at the weekly fair value gap, I was calling it out that I'm still favoring a run towards this sell side liquidity. I think there's still unfinished business down there, and we in fact reached to that sell side liquidity now. So now regarding the upcoming trading or what I'm expecting later on, since the leadership move was in the ES, you will see that in the other averages, the NQ price hasn't reached there, so it will be the successor. So in this case scenario, price might continue going lower in ES. It's not gonna be with speed towards the downside, maybe reaching to this weekly fair value gap that is outlined here. Otherwise, it might just consolidate, because we know that once we reach to the higher time frame liquidity pools, we have to work inside the intraday liquidity pools, because there's no clear depiction to what price is trying to do. Here we have two up close candles, are the bearish order block since we closed below them, and this down close candle is a bearish mitigation block since we have a high, low, lower high, and lower low. So this would be classified as a bearish mitigation block. So we can expect some kind of a rejection at these areas because we have two BD areas that are converging at this area, and we have a potential fair value gap that might form upon next week's closing price. So we'll be monitoring closely on what the price is trying to do, and based on that we'll be working with it. But at the moment I'm favoring around towards this weekly fair value gap. Otherwise, I might be wrong on my view here, but this is what I'm preferring. I'm preferring a run or a touch just to the weekly fair value gap. And there are three specific levels for this range or for this fair value gap. It's not ambiguous. It's not a zone. We have the high, the consequent encroachment, which is the midpoint of this fair value gap, and the low. These are three specific levels that I'm aiming for as means of a drawn liquidity. But as I've mentioned, there can be weaker move here on ES since we have reached to the sell side or we reached to the drawn liquidity. Going to the daily chart, as you can see here, price has broke lower this Monday, Tuesday. Price just it has took the sell side liquidity, traded inside this fair value gap. On Wednesday, it has traded and closed below the fair value gap, and it was slowly approaching towards these sell side liquidity here. And we approached them Thursday. Friday was a bit of a consolidation day. It was a bit of a tight day because after seeing large range days, we know that we might expect a consolidation or a range bound trading, and we in fact seen that here on Friday. So we have a sell side liquidity here and the daily refined fair value gap, because the fair value gap would be from this high, from this candle's high to this candle's low. Price at this candle and these three candles here, it has repriced and rebalanced some of that fair value gap. So now the actual fair value gap would be refined to this area right there, from this candle's high to this, let me view it here, from this candle's high to this candle's low. This is the refined fair value gap now. So I'm still expecting a run towards the sell side liquidity and this daily refined fair value gap. And we have a fair value gap here. So we'll see if price wants to offer us perhaps an institutional order flow entry drill that can send us to the drawn liquidity. That's pretty much it for the ES. Going to the NQ, here I'm viewing the continuous contract for NASDAQ. As you can see, now the six sister concept is now being amplified and being highlighted here in the NQ. You can see that price has not yet reached to the sell side liquidity, which is previous month low, whereas ES, when you compare to ES, price has already swept that low. So I'm still expecting price to reach to the sell side liquidity. So I'm still expecting lower prices on NQ. It's going to be the six sister, so you might not be able to see the strong moves or the immediate moves. There might be some of high resistance liquidity runs or a low probability conditions in the marketplace, but eventually price is going to be reaching to the previous month low. And if it really accelerates through the sell side liquidity, which is previous month low, we have another sell side liquidity here and the weekly fair value gap here that can be used as means of a draw liquidity. Going to the daily chart, as you can see, the same thing has been said too for the weekly chart. I'm still expecting around towards the sell side liquidity here and these relative equal lows, and inside this weekly fair value gap that's now refined from a weekly all the way down to the daily. Now here in the daily, it might not be viewed or seen by the retail or by anyone who's viewing price and is not depending on the high time frame and he's nesting his BDRAs from the high time frame all the way to the lower time frame. He might be lost in the price action and how he can navigate through price action properly. Anyway, so this is the weekly fair value gap. It's nested from the high time frame all the way to the daily time frame. We have relative equal lows here inside this weekly fair value gap. So I'm expecting a run towards the previous month low. Run, if it really accelerates through the previous month low, we might reach to the relative equal lows and to the weekly fair value gap and the three specific levels: the high, the consequent encroachment, which is the midpoint, and the low. Now you can refine it to this small refined daily fair value gap, but I haven't done that here, so I'm going to be keeping the charts clean so you can be viewing it easily. But you can of course do that. You can go to your charts and you can plot a fair value gap from this high to this low, and you can also expect price to reach to these specific levels. So that's pretty much it for the NQ. Going to Dow, or we're also viewing this is the weekly chart. We're also viewing the continuous contract on Dow. As you can see, last week we jammed through the sell side liquidity, this sell side liquidity, this low, and this sell side liquidity, which is previous month low, and we were very close from reaching to this sell side liquidity. Now you can see how price, when it has traded up higher, it has reached to the low of the weekly fair value gap, which is from this candle's low to this candle's high. We've seen some reaction, and if you go to your charts and you take the Fibonacci and try to measure from this high of this wick, so the premium wick, if you divide it into 4 quarters, you'd see that price has been showing us resistance at the 25% level. So if you're dividing this area here, the premium wick, from the high of this wick or this candle to the opening price, that is the premium wick. And if you divide it into 4 quarters, you'd see the price has been showing resistance at the 25% level. And then it has gave up the ghost and just traded lower, taking the sell side liquidity. So I'm still expecting price maybe perhaps to reach to this sell side liquidity, if it really wants to reach to the sell side liquidity, because we have much sell side liquidity reaching residing below there. We have this long wick, so you'd measure the consequent encouragement of this long wick to see if price wants to reach there. But this is obviously if we were really animated next week, which I'm not really expecting, because the economic calendar is not really heavy loaded when compared to the previous weeks. Anyway, so I'm still expecting a run. I'm still expecting and favoring a run towards this sell side liquidity. Going to the daily chart, as you can see, we have a fair value gap here. Price might retrace and work inside of that fair value gap. We have the low, the consequent encouragement. I really don't want to see price go all the way up to the high of that fair value gap. So the consequent encouragement and the low would be my favored areas, or like my favored levels. The price respect them and then reverse lower, reaching to the sell side liquidity. And we have a daily fair value gap, which is a refined fair value gap that is just below the sell side liquidity. So if really price wants to reach there, we have a sell side liquidity and we have an inefficiency that is waiting to be efficient. So I guess that's pretty much it for the Dow. Going to Euro USD, also known as the fiber. As you can see, price has just been in tight range lately. We've seen price trade a bit lower. You can see that the weekly consequent encouragement viewing price, and it's just resisting price from going higher and just sending it lower. It's repelling price away, the weekly consequent encouragement. I'm still aiming for the wick consequent encouragement, which is this discount wick. If you divide it in half, the midpoint is this level. Go to your charts and measure it by yourself. And we have the low, so these levels I'm still expecting price to reach them. If the DXY managed to reach to the buy side liquidity, which I'm really expecting to be done in the near future. So if we manage to trade higher on DXY, reaching to the buy side liquidity, I would be expecting Euro USD to trade lower, reaching to the wick consequent encouragement and to the sell side liquidity, which I'm really expecting and favoring a run towards the buy side liquidity on the DXY, as I've mentioned at the beginning of this weekly review. Going to the daily chart, as you can see here, I've annotated this chart last week and I've mentioned that we have a fair value gap here with a bearish order block, and price did trade and worked inside the fair value gap and the bearish order block. On Wednesday, we have this just long premium wick reaching to the weekly consequent encouragement, which is the bearish order block mean threshold approximately. So if you'd measure the bearish order block mean threshold, which is the midpoint, you would see that it's approximately at the weekly consequent encouragement. So we have more than one influence here there. So price did perfectly show us the resistance that we want to see. We don't want to see price closing above that level. So if in another scenario would be, I would see price trades and closing above that level, which is the weak consequent encouragement, I'll be calling higher prices towards this buy side liquidity and this fair value gap. But in this case, we just traded to it, accumulate positions, did the maximum damage that we can be doing to the retail by trapping them, in the wrong side, in the wrong direction, and then jamming lower and taking the sell side liquidity. And in the future, we'll be expecting the weak consequent control, which is the weekly on the weekly chart. It's nested all the way to the daily chart, and we have the sell side liquidity. Now I'm expecting the consequent encroachment of this Wednesday's premium wick to act as resistance, which is all approximately the high of the fair value gap. So if we trade above the weekly and close above the fair value gap, I will be reconsider my narrative and my bias for Euro USD. Also, I need to be mentioning and viewing DXY and how it has been trading. And I really want to see if price really wants to reach to the weekly consequent encroachment, which is from the weekly chart. I want to see price close by next week, anytime next week, to close below the consequent encroachment of this discount wick. So once we close below the consequent encroachment of this discount wick, which is the midpoint, I'll be mainly looking for shorts, expecting the weak consequent encroachment, which is from the weekly chart, to be reached. Also, if you accelerate through that level, I'll be expecting the sell side liquidity to be tapped into. So that's pretty much it for the Euro USD, or also known as the fiber. Going to the Pound USD, also known as the cable. So this week we've seen price jamming and sweeping, running actually, the sell side liquidity, which are these two levels here. And there's one extra on the daily chart. I'm going to be viewing it later. So we took these sell side liquidities here last week, and we will be monitoring closely DXY. If it really wants to reach the buy side liquidity, and it's looking and showing us all the signatures that it wants to reach to that sell side liquidity, I'm expecting price to draw towards this weekly fair value gap, which is from this candle's high to this candle's low. There is a small inefficiency in price that price wants to make it efficient. So if, as I've mentioned, DXY traded higher, I'll be expecting Pound USD to trade lower towards this inefficiency to make it efficient. Going to the daily chart, the same thing is mentioned here, how we took the sell side liquidities here. This sell side liquidity, we swept it, which is viewed on the daily chart, and this sell side liquidity, we tapped into them. This is the weekly fair value gap, which is nested from the higher time frame, which is from the weekly. On the daily, it doesn't look like it's a fair value gap, other than this small inefficiency, that's price, which is a refined one. So you can also draw your fair value gap, another fair value gap here, to have a more refined fair value gap, so you could be monitoring. We also have the sell side liquidity, so we have a sell side liquidity here, which is this low, and below it we have the fair value gap. So this is my outlook and what I'm expecting from price next week. Now, regarding the economic calendar, it's not going to be heavy and loaded compared to the previous weeks, where last week we had FOMC and the week before it we have CPI, and the first week of the month we had NFP. So next week is not going to be heavy and loaded when compared to the previous weeks. So the trading conditions might be more better to be in your favor. Regarding ES and NQ, you've seen at the beginning of the videos during this weekly review that ES has reached the sell side liquidity before NQ, which means that NQ is now the sixth sister and it's trying to catch up with ES. As ES has traded lower, NQ is trying to catch up with it to trade lower. So during that time, ES might continue trading lower, but it's not gonna be the heavy and strong moves toward the downside. And we're gonna be seeing also the NQ trading lower just to catch up with ES to reach to the sell side liquidity. So that's pretty much it for this weekly review. I hope you learned and gleaned something from it, something useful. And until I talk to you next time, be safe. Assalamu alaikum warahmatullahi ta'ala wa barakatuh.